Hey everybody, it's AJ on crypto. There's an incredible amount of things to unpack here. You've got this consumer price index that came down today. It was cooler than expected. So obviously markets are soaring, futures are soaring. I think it's a little bit overdone. Why? Because these are trailing numbers. There's more to come. There's just a lot. But enjoy it while you can. If you're looking at the stock market, the cryptoverse also has taken a step, forward and up. I think it's because some people are starting to realize that yes, FTX failure is bad. There are a lot of people involved. However, there are crypto projects that have nothing to do with it, are not being affected by it, except possibly in a favorable way, right? So if you were holding whatever assets on FTX, who knows where those assets are? So we won't know for a period of time, and it'll have to be figured out. Before we start getting into other news, I wanted to talk about Senator Elizabeth Warren again, opening up her mouth, talking about the SEC should be more aggressive. How much more aggressive can they be? How much more? They don't lay out regulation that's clear and transparent to these companies. They're late to the game, in trying to, even think about working with these companies to get them in the right place. Gary Gensler was on CNBC this morning talking about how, he's trying to meet with these companies and blah, blah, blah. No, he's threatening them to come into their office, into SEC's offices. Instead of saying, hey, let's work together, let's get you on the right path, let's make your company more transparent, and let's do this the right way. There's a reason why FTX was not based in the United States. He also rambled off something where, he started talking about in generalities, that these exchanges are not regulated, blah, blah, blah. And I sat back and I said, that's incorrect, sir. And he knows it. There are several exchanges like Coinbase, like other exchanges that are based here in the United States that are highly regulated. Highly regulated. They've got to jump through some serious freaking hoops. And that's just at the federal level. And then for every state that they do business, they've got to jump through more hoops. And that's even if the hoops are on fire. See what I'm saying? Texas and New York looking at you. So there's a lot that these US-based exchanges have to go through that external exchanges don't. That's why there's FTX.com and then there's FTX.us. FTX.us is a different entity operating within the United States. A couple of exchanges do that. Binance.us does that. When they're here, they become highly regulated. They have to do a lot of things, unless they're trying to fly under the radar and do all these kinds of things. But the upright exchanges like Coinbase, I am not a fan of centralized exchanges. I'm not. I don't like some of the, business dealings that or how Coinbase treats its employees and, potential employees. Those are operational issues that I have with them. But I'm not going to walk out there and say that Coinbase is a bad exchange. They're not regulated. He knows they're regulated. That was a stupid comment. And I think he's going to figure out that, yeah, I flubbed that one. Because I don't think he was saying it specifically for an exchange. I think he just meant in general. And he should have said, hey, there are exchanges that are regulated and blah, blah, blah. But I think he was too hot and bothered over everything that's going on with FTX. He got called out on the carpet for going after Kim Kardashian. And, not surprising, right? But with regard to Senator Elizabeth Warren, just instead of opening up your mouth, there are certain things I agree with her about. There are certain things I don't. This is one of the things that I don't. Instead of opening up your mouth and talking about more aggressive tactics and things like that, how about you create better regulation, transparent regulation, and how about education about the regulations? That would go a long way, and that would help to mature the burgeoning crypto market. And I say burgeoning because you can't contain it, so you might as well work with it to shore it up, make it better. Just saying. The next one up, FTX, we know it's a mess. We already know it's a mess. But here are the key companies that I think, and I'm reading my notes, the key companies I think that are going to feel it. You have SoftBank, Tiger Global, Thoma Bravo, Sequoia, BlackRock, Galaxy Digital. Sequoia, I forgot the number that they're exposed by, but they've already written it off to $0. Digital has a $77 million exposure, and they're writing it off. So you have companies, Paradigm Investment Group. These are all companies that were, clearly investors in FTX that are now saying, "Whoa, we should think about writing these things off," or have already done so. But all of those companies will probably do just fine. They're not happy to be losing money. Let's get it straight, but they will be fine. Now, when you look at that FTX debacle, what I'm also looking at is their play on Solana. FTX owned like something like between FTX and Alameda owned like something between 10 and 20% of Solana coin. Those are big numbers. Those are big numbers. Some people are thinking that it was closer to 40%. That's huge. Hence, Solana took a nosedive, basically face planting. Now, if you're a company like Helium and thinking, "Oh, we just moved over to that platform," because they were convinced to move over to that platform, I'm not going to drop names, but now are they thinking about maybe we should move to another chain? And I'm thinking there are probably a lot of projects that are thinking, well, you know what? On top of, this, clearly FTX was propping up Solana, right? And I don't think they were doing it, in a bad way. I think they just didn't want Solana to fail, to give it a chance to, catch its feet and, stand up. That said, it still winds up in the position that it's in, right? So if Solana has another network outage, I hope they don't. Knock on wood, I hope they don't. But if they run into any other trouble, Solana goes bad. Projects that are strong, that have potential, might be looking at them being on Solana and saying, yeah, maybe that's not a good place. Hence, could that be an opportunity for them to move over to a Cardano, to a Polygon? Those are two very obvious choices if you had to jump from Solana. And I think there are probably projects that are thinking about it. And that's where my head would be right now if I was heading up one of those projects. As a matter of fact, I do head up a project, and we are not working with Solana. Just saying. Now, Twitter, with good news, Twitter has filed its paperwork with the Financial Crimes Enforcement Network, or FinCEN, to become a payment processor. Now, currently, Twitter has Twitter Tips, but it's a very limited implementation. It's only open to a few people, where people can pay creators directly. Now, hold that in your head. Right now, that's done by Strike, and Strike, through Strike's API, because Strike does Bitcoin. Cool, not bad. But now that Elon is here, remember, he was one of the founders of PayPal, or initial investors, can't tell which one, but he's involved with PayPal. Could that mean that they move over to PayPal for certain things? PayPal has Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. Yeah, the last two, I have no idea about that. Those are not things that are on my radar. But Ethereum and Bitcoin, okay. Or does he work with his new partner, Binance, who's got $500 million invested, and say, well, they're a freaking crypto exchange already, and they can open us up to a hell of a lot more crypto coins, including Doge. So the foundation is laid now. The foundation is laid for that to happen at Twitter. So that's something I'm thinking about. Now, I wanted to close out real quick on leveraging, okay? Meaning you've got assets and you leverage those assets to get money so you can do more investing. Unless you know what the hell you're doing, don't leverage. You'll get into trouble. The reason why I bring this up is because if you look at FTX and Alameda Research, you're looking at big leveraging. Huge. I know that's a huge example. That's a really big, example. But that example plays out even at the personal level, right? By doing something like that. So I want you to consider, really doing your research on leveraging. And, I don't do it. I'm not leveraging Jack. My assets are my assets. Could I be making some money off of that? Yeah, I could. I'm not going to. Why? Because I don't know all of the ins and outs about leveraging. Leveraging is a huge mathematical thing, not necessarily a common sense, this is how you do business thing. So what I would strongly suggest is before you start thinking about leveraging, you start thinking about, what that really means. Something else that I would start thinking about is contemplate how you use centralized exchanges. I've been saying for a really long time that you should be paying attention to centralized exchanges, which are custodial wallets versus non-custodial wallets. Pay attention to where your money is, who's involved with it, what they're doing with it. I told you, I started thinking about exchanges as just banks. Banks with limited limited resources, limited features, limited offerings, but I think of them as banks. You're giving them your money, they're holding the money, they charge you for certain things, just like a bank. You've got to jump through some hoops to access your money or your digital assets, just like a bank. So I tend to keep, 95 to 98.5% of my money. Yes, just in my digital assets, I keep 95 to 98.5 of my digital assets in non-custodial format, meaning I have my keys, not your keys, not your crypto. I have my keys. The only money that I have left on an exchange is because I did a transaction and I want that accessible on purpose, meaning I can use it on purpose. I often talk about how I have money for trading, or I have digital assets for trading, I have digital assets for holding. All of those assets for holding are out of an exchange. Like I said, 95 to 98.5% of those holdings. And those holdings are dwindling on exchanges. So instead of 1.5, it's dwindling down. I'm trying to get to like 99%. And those are goals. But pay attention to that. Okay? Just please do your own research. Now, let's get to the numbers, because I think you're going to be a little bit surprised about what's going on. Let's see here. There you go. So let me just refresh this for you so you can actually see, what the winners and losers look like. Let's click that one more time. So now you have that. Obviously, the list of losers right now is shorter than what you'd have thought, because right now you have a big list of winners. All right, Ethereum is back up 7% to 1302. Let's see who else I'm paying attention to on this list. Let's go back up here. No. Polygon up 14% to $1.06. It was as low, I think, yesterday as 80 cents. I know it was in the 80s because I bought. But that's what I'm looking at. Let's see. I thought I had seen Doge on this list. They're not. I guess maybe they're feeling they're getting there, but they're not quite there yet. But that's all right. Looking at the big picture, you can see Doge is up to 9 cents now. Okay, let me tell you, I bought Doge, SHIB, Bitcoin, and Polygon yesterday. Okay, those are ones that I dipped into because I thought of it as an opportunity. Okay, I thought of it as a big opportunity. Now, looking at Ethereum being close to 1,300, that's pretty good. Do I think that will continue going up? I don't know, but it's in a good place for me right now. Excuse me, Bitcoin being at 17.5 and a half. The old low was 17.6. Here, I'll even show you where my bands are. So my bands, let me see if I can bring this in a little bit so I can show you where my band, there you go. So my bands were originally at the low was 17.6, 17.602, 17.608, something like that, 17.608. And you can tell right here, we're trading a hair below that low that was established a long time ago, and we hit a new low of 15,618 15,618 for Bitcoin. That's a big drop. So I denoted that by this yellow line right here, so you could see here's the new low for now. For now, that's the new low. The previous low was 17.6, so I'm waiting for the market to get back above 17.6, let alone where it was traveling above, above 20, right? Look at where it was. It's nowhere near that right now. So to me, we have a long way to go. We have a pretty decent way to go. It just is what it is. Looking at the list, let's refresh that, just so that we can make sure that we have the right numbers. You can see that certain coins are up. What I want you to do is I want you to start paying attention to what numbers, what projects and coins go up faster than others. Okay, I was looking at the list last night, and I was looking to see, what the top 25 losers were, right? What the top 25 winners were, or who at the moment right now, according to their year to date, or versus their all-time high, both dropped the least, or at this stamp in time had recovered the most, right? Because I was telling you that some coins had dropped, 98% off their all-time high, 90%, 80%. So I started looking at that, and I started realizing, wow, there are a lot of coins within the top 10. Polygon, Bitcoin, Ethereum, I think SHIB was one of them. I think Doge was one of them, that just seemed to be recovering better than other coins. Quant was another one that was just recovering better than other coins. And I'm not talking about, stable coins. You've got to create that list and remove the stable coins, and then you look at that list, and that's where you get to. All right, that's what I started looking at. Like, what's recovering faster? What projects are they doing? What's their leadership like? What's the community like? And that's how I do it. That's how I'm slicing and dicing to see what kind of, from a numeric perspective, what kind of movement am I seeing. But that's a part of my research. I do it when things are going really well. I do it when things are going really poorly. So in addition to all that news, I'm also looking at the numbers. And I want you to do the same thing. Do your own research. Don't rely on talking heads to give you information and then you act on that information. I tell you to do your own research. I practice it myself. My kids practice it themselves. And last night we made a decision. We're gonna hop in, and we're gonna take some extra money we had lying on the side, and we're gonna go do it. Not extra money. Who has extra money? But we said we're going to take this money that we had in reserve to actually make moves like this, and we're going to get in. And that's what we did. And we're seeing some positive upside to it right now. I mean, when you can say that you have Polygon fighting to maintain above $1, it's at $1.06 right now. After being in the 80-cent range, it's up over 20 cents from last night. That's huge, huge, huge. Even Solana's up 10%. I really don't have anything against Solana except that safety net isn't there anymore. So they're really going to have to step up their game. Shiba Inu, cool and steady. But we got in, when it was like, I'm just going to read from here, 10:22 now. We got in at, I think it was like 88.20. Because we could. Because I think Shiba Inu's got a lot going on. I have bigger bags in projects that I believe are going to have more coming. When I can look down the road and see what kind of success they're going to have. Anyway, Eddie J on crypto. Hope you have a great day. That's what I've got. Have a good one. Bye-bye.